welcome to Indianomics. Today we start with an accusation. Has the Reserve Bank eased the intensity of its fight against inflation? Why do we ask that? At the October 4 policy press conference, the Reserve Bank said it believes the neutral real rate for India has dipped to 125 basis points from 150 to 200 basis points that it maintained until recently. So what is the neutral real rate? Let us start with real rate. Assume you give your bank 100 rupees for a one-year term deposit and say you get 7% for it. Is that your real return, 7%? No, because in this 1 year, prices may have risen 6%. So your real return is the nominal rate minus 1 year inflation, that is 1%. Now what is the neutral real rate? It is that interest rate at which the economy is operating at potential and inflation is at the target set by the Reserve Bank. In 2014, ICICI Securities studied some data that showed that the neutral rate for India is 1.6 to 1.8%. An RBI study of October 2015 also estimates that the neutral rate for India is between 1.6 and 1.8%, but said that depending on the method of calculation, it could vary between 0.6 and 3.1%. From Jan 2014 to August 2016, RBI officials maintained in their communication that the neutral real rate for India is 1.5% to 2%. Now, why is the neutral real rate important? Theoretically, if the economy is operating below potential, the policy rate should be below neutral rate. The low rates will help people borrow, consume and push up growth. On the other hand, if the economy is overheated and is operating to potential and inflation is therefore higher than target, RBI should keep the real policy rate above the neutral rate so that people borrow less, consume less and inflation falls. In the just concluded policy, RBI did not argue that the economy is growing below potential and hence policy real rate has to be brought below neutral rate. It said the neutral rate itself has fallen to 1.25% from 1.5 to 2%. What changed in October 2016 from the trends in 2014 to 2016? RBI merely said neutral rate has fallen globally. But the global neutral rate has been falling since the financial crisis of 2008 due to overcapacity, demographic aging, excess saving, etc. This process is now troughing out. Also, if RBI arbitrarily says the neutral rate has fallen to 1.25%, can it lower it further to 1% and then to 0.75% to justify lower and lower policy rates? Separately, RBI has also dropped its goal to reach 4% inflation by 2018, citing amendments to RBI law. Hence the question, has the RBI lessened its attack on inflation? Today we have three experts to explain what is the neutral rate for India, whether RBI's argument is justified that the neutral rate has fallen, or has it given up the fight against inflation or at least loosened it somewhat. I have with me Sonal Verma of Nomura, Sajid Chinoy of JP Morgan and A. Prasanna of ICICI Securities. Gentlemen and lady, welcome. Well, Prasanna, let me come to you first. In November 2014, you all had written a piece saying that the neutral real rate for India is probably between 1.6 and 1.8%. What is your sense? Has the neutral rate for India fallen?
So that's right, Latha. We wrote about it in November 2014. A couple of things which I would like to point out based on that is, one is that on neutral rate, I don't think there can be one precise number. It has to be a range. In fact, if you look at both research and how central banks in other countries talk about it, they usually talk about a broad range. And in fact, when they describe policy also, they don't say it's exactly neutral. They say it's broadly neutral. I think those words are used very carefully to convey a sense of uncertainty. And the second point is, of course, I think, unfortunately, RBI has been playing a bit fast and loose with its definitions. Even the former governor was doing it in my view. So in the sense, there is a neutral rate and then there is a real policy rate. So neutral rate for most of the times, it can be fixed, but the real policy rate can vary around the neutral rate. So our understanding is, as far as what we are seeing in India now over the last 2 years, is the neutral rate based on our estimates is around 1.7%, and the real policy rate is below it, and that is because inflation has been falling, and of course growth has also been below potential output. So because of these reasons, RBI has been trying to keep the real policy rate below the neutral rate. Now, as far as your question whether anything has happened for it to change so dramatically in India, I doubt it. In fact, the fall in neutral rate in the US has been happening over the last 2 to 3 years, and perhaps we are near the end of that phase, and maybe now the neutral rate in the US might have also bottomed out.
Sonal, similar question to you. Do you think the neutral rate in India has fallen? Has something changed over the last 1 year to make that rate come lower?
Yeah, I think, Latha, if India was completely a closed economy from that perspective, this is a country where we are facing the exact opposite of an aging population. You have a working age population that's set to increase. You have huge investment needs of the economy. Obviously private capex is a bit slow right now, but the outlook for investments over the medium term continues to be quite positive. And, there have been reforms by the government which suggest that productivity growth should also pick up, all of which actually bode fairly well for potential growth. The inflation psyche, is an issue. We have seen inflation come down, but inflation expectations have in fact gone higher. In this backdrop, I think, it doesn't look like, as far as just India is concerned, there are any reasons to believe that the neutral rate would have gone down. Which is why if you look at the Reserve Bank's argument, it's not really linked to India. They are using the global neutral rate having fallen as an anchor for lowering Indian real rate. If indeed real interest rates in India were very tight, by which I mean that the real interest rates were significantly higher than the neutral rate, then you should be seeing significant disinflationary forces in the economy. Expectations should be coming down. I think we did see that during 2013-14, partly in 15, which suggests that the interest rates were tight and real interest rates were above the neutral rate. But in the last 1.5 years, we've seen more signs of underlying inflation stabilizing around 5%, which actually doesn't suggest that real interest rates are, higher than the neutral rate. Maybe they are already closer to neutral rate. But this is important for a reason. If the underlying inflation is stabilizing around 5% and, we are okay with real interest rates staying around neutral, which means policy is neither accommodative nor tight, then why should inflation fall any further, which suggests that the inflation tolerance is around 5%.
Let me pose the same question to Sajid and then come to, more arguments. Sajid, do you believe that the neutral rate has fallen?
Latha, I think there are three different issues here, and there's sometimes some definitional confusion. Firstly, let's stipulate where the real policy rate today is. There's a lot of confusion about 125, but the RBI's forecast for inflation in March of next year is 5%. In March of the following year, in 2018, it's 4.5%. So it's fair to say, if you assume a steady decline, a year from now, next October, they expect inflation to be somewhere around 4.75, the midpoint of that difference. So if my policy rate today is 6.25 and I expect inflation a year from now to be 4.75, effectively real rates today already 1.5%, number one. Number two, I want to separate acutely the neutral real rate versus where today's real rate is vis-a-vis neutral. The neutral real rate, as has been discussed often, is a time-varying concept. It depends on potential growth, it depends on technology, on preferences, on savings behavior, on investment behavior, and it's like potential growth, it's unobservable. So for us to say, here is what it was yesterday or today is different. But the larger point is, the actual real policy rate is only at the neutral rate when output gaps are zero or closed and inflation is at its long-term target. Now, neither of those conditions are fulfilled in India. Our long-term target for inflation is 4. Today, inflation is 5. And output gaps clearly may be closing but are still negative. So if you apply a typical Taylor rule, which most central banks in the world use, what that suggests is very rarely are actual real policy rates at neutral. That's a very unique situation where, so for us to claim at every policy for markets to say, well, the policy rate is at neutral, is just not right. Policy rates will only be at neutral when output gaps are closed and inflation goes to its target. Now,
Sajid, let me stop you there.
The conclusion is, we don't even...
Let me stop you there. The Reserve Bank said we are reducing the neutral rate itself. I am not able to get that argument. Okay, if prices are rising, then you increase the gap between neutral and real. If prices are falling and there is output gap, then you reduce the gap between neutral and real. But why did the RBI say that the neutral rate itself has fallen? That looks like an insidious argument. Prasanna, would you... okay, Sajid, would you agree with that?
Well, to be fair again, neutral rates also are time varying. The neutral rate, I would argue, in India in 2013 is very different from 2016, and I'll tell you a very simple reason. Listen, we can talk about potential growth, but the fact is, let's take a simple part of it. Exports 2 years ago were growing at 8 or 10%. Exports today are either contracting or at zero. Very hard to make the case in this global economy that India's potential growth today is the same as it was 2 years ago. Yes, you've done a bunch of reforms which will affect potential 5 years from now. But so today I would argue potential is perhaps lower than the last 2 years, dragged down by global developments. This is true in every emerging market, and therefore I'm not surprised that maybe at the margin neutral rates have come down.
Okay, well, let me put the same argument to Prasanna. Prasanna, are you convinced that the neutral rate should have fallen? I can even take it if the real rate and the neutral rate difference is reduced. But I mean, 2 years from now, okay, exports, but how much is India an exporting country? Within India itself, if anything, the second quarter numbers are likely to show that earnings has grown. Aggregate demand has grown for two-wheelers, even for a whole range of consumer products. At this juncture, is the Reserve Bank justified in saying that the neutral rate has fallen, Prasanna?
Yeah, so I think the question should be posed to RBI whether they are saying that implicitly that the potential growth rate in India is falling. Are they saying the return on investments in India is going to be falling? Are they saying that there's going to be excess savings over investments in India? I think these questions should be posed to RBI. Unfortunately, they didn't give much of an opportunity for you all to post more questions.
Yes.
That apart, I think I would agree with Sonal here. I think like she said, the proof of the pudding is in the eating. You observe the inflation, the underlying inflation, the core inflation after stripping out petrol and diesel and perhaps even gold. I think it's more or less been sticky over the last several months. Granted, it's been at the lower end of the range which we have observed, but it's more or less around 5%. It doesn't show any signs of budging down, which tells me that I don't think there is too much slack in the economy. Therefore, I don't believe that, or I don't believe there's any structural reason to say that the neutral rate should fall. And remember, I think when we're kind of comparing neutral rates observed in the West, say particularly in the US and other developed economies and the emerging economies, I think what is observed in those countries should be the floor. So the Federal Reserve in its latest projections has said that the long-term Fed funds target rate should be at 2.9%, and of course their inflation target is 2%, which means they are working with a long-term neutral rate of around 0.9%. So I would argue that 0.9 to 1% should be the absolute floor where other countries are concerned, and given the kind of the growth differentials and the productivity differentials and the return expected return differentials between India and US, the neutral rate in India should be higher.
Okay, well, give me a monosyllabic answer, three of you, if I've understood you right. Prasanna, you think neutral rate has not fallen?
No, it has not.
Sonal, has the neutral rate fallen?
Not for India. It has globally, but even in that context, not for India.
No, my question was for India. Sajid, you think it's fallen for India?
If I look at savings investment behavior in the last 3 years, I think compared to 3 years ago, it has fallen, yes.
Okay, so 2:1, the neutral rate has not fallen. We have to take a break. I'm coming back with more questions, this time on whether RBI is loosening its fight against inflation.